What's up, guys? JJ Fade 23. How's everybody doing? Hope you're having a good weekend. I'm gonna talk about triggers in this video, which will by far increase your win rate, and it will also increase your risk reward and make your risk smaller, but have a valid stop and give you multiple bigger R returns on A+ setups. All right. I talk about triggers all the time. A lot of people just short stocks going up into levels. They just short and hope it stops there, or they short with a wide stop and give it much room. Which when you use a really wide stop, you have a high win rate maybe, but you don't have good R return at all. Every trader who uses a system as far as like short the open, 30% stop, their R return is crap on that. You're lucky to get a 1 R trade when you win. All right, so you can have a much lower win rate and still have much better profits this way. It's all about personality, what you like better, but this is how we have a high win rate and give high R returns, okay? So when I always say in the room, trigger at key level, what does that mean? Trigger at key level, guys. Triggers are a trend break. Everybody knows what that is. Well, in order of what they are, okay, what my favorite ones is. Number one, trigger. Stuff candle is the first trigger. Number two trigger is a fake breakout. And then number three trigger is trend line break, okay? So these are the three entry triggers that we use in JJ Fade 23 trading. Now, what does that mean? All right. So we already went through the red flag criteria. We already know what stocks we want to trade. I'm going to go over a few examples over the last 4 or 5 tickets we traded, starting with LFLY, okay? When I would exactly enter and when I did enter on the ones that I traded. So this is what we do first, all right? We go to the daily chart, all right? We mark off the clearest pivots on the chart. If the stock is down here at $3, $3.30, whatever, we mark off the ones above. I also, guys, remember, make note below, because below is where the stock might want to bounce when it's coming down. So ideally, you don't want to be shorting a stock with very clear pivots right below where you'd be shorting. So if you're shorting up here, right, you don't have any pivots till here and then down here. That's not bad. But what I do is mark off the most clear pivots. Right here, the ones that multi-touched right here, and the very clear ones that stand out right here and right here. All right? And the recent pivots I love the best. So you have this pivot right here, 425. Now, how do we know when to enter it? All right? Let's go over here. As you can see, the pivot is right here, right? So what you want to be doing, you guys, and this is another thing too, right? If you have 2 or 3 pivots, guys, look. If you have 2 or 3 pivots right on top of each other, I recommend, even if you get a trigger, you have your stop above the most recent further away. Let's say there's like 3 pivots right close to each other. Just put your stop above the further one away, especially if it's a $0.50. Because sometimes you get something like this happen right here, all right? If you see the price action here going up, going down, now we come up into these pivots and then we fall back below this high that we just made. That is a fake breakout trigger at or just below a key level. So we have 3 key levels here from the daily chart. Now we have the price going up, going down. We have a fake breakout and it slams back down. That is a fake breakout trigger. I would short that once we fell back below this level right here with my stop above that 450 at 452. And then you have more confirmation when you get this trend break, this little micro trend break below this key level. All right? So you notice, like, see there's a daily level here. The stock goes up, it pulls back, it goes up. Guys, you have to be kind of like all the things that you put together in your trading. See, I wouldn't trade this because it's so early, because you get more fake triggers. This is what I mean when I'm saying when you have like all the stuff together, the best time of day with the best shorts, the best no red flags, and then that helps your triggers work even better because you have a higher chance to have a really good trade. I'm just using this to show you an example. It's way too early. in the morning. It's like, crack of dawn right here. But I'm just using to show you what a fake breakout is, where it comes up into a pivot and then it falls back below the previous high it made, right? That would be a fake breakout. And then if you want to wait for the trend break, the problem with trend breaks is you have more risk on a trend break than you usually do on a fake breakout. But this is a trend break at or below key level. This is a fake breakout at or below a key level, okay? So then, and this is a great example of a stuff trigger. Look, the stock's spiking, spiking, spiking. It pulls back and tries to go, boom, stuff trigger at or below these key levels. Boom, once you get that stuff, you short it, you put your stop above. When you get a stuff trigger, the stock shouldn't go back over it ever. So you don't really need to put your stop over the $0.50 here. This is the only trigger that I would use the very high of the stuff, because stuff shouldn't reclaim. Sometimes fake breakouts, you get something like this. You get like a stock that does a fake breakout, it falls back below, then it goes back up a little, and then falls back below. But I will still use the pivots as a stop for this one. But on a stuff, you can use the top of the stuff candle, because that shouldn't never curl back up and go. If it does, it's going to squeeze. So that was the first example. NBY. So here's NBY. This is a little later. It's still like early for me, but I'm just using these for examples, guys. So as you see again, right here we come up. We still didn't quite touch the pivot. We pull back. Now we get into the pivot and we get over this price action right here. Over this previous high intraday. All right. Once we fall back below this previous high intraday, this is a fake breakout of the intraday price action at or just below the key daily level. And then you short with your stop above. All right? That is exactly what I'm talking about. This is a fake breakout. Falls back below. It's actually a fake breakout of the intraday price action and an over-under of the daily pivot. So you can short that with your stop right there. That is fake breakout trigger. And also, guys, again, look. Usually where there's a fake breakout, there's also a trend break at or just below this key daily level. So fake breakout trigger, short. Trend break trigger, short. Those are two triggers, one level right there. Those are even my favorite sometimes, because you actually have, sometimes you get a fake breakout, it falls back below, grinds back up and still goes again. But if you get a fake breakout and then you also get a trend break at that same level, it's probably going to work pretty good. You're going to at least have a decent pullback from there. Okay, so MBY now comes over. Here we have a giant. When this happens, guys, it kind of screws your trade, because you would want it to come up higher and then pop into a stuff trigger and then you short. This is just too far resistance up. By the time you realize the stuff trigger, you're already like, wow, too far away. I mean, you could literally like short 92 cents, risking 10 cents and still have a decent trade, get 2-hour trade. But, that's more of a topping tail than an actual stuff. Just a big topping tail and stuff. Stuffs are more like what I showed you on the other one, where you get something like this. Stuff is a fake, guys. The difference between a stuff and a topping tail is this. A topping tail just goes straight up and straight down. It doesn't trick anyone. Straight up and straight down. It doesn't trick anyone. A stuff move, you go up, you pull back, and then it has a fake move up to trap longs, and then boom, slams. That's why they're my favorite, because longs all get bagged on this fake breakout here, and it slams. Just like this. It goes up, it pulls back, this candle opens, it starts to push up, longs buy it, and then they get bagged on the stuff. That's why I like stuff moves the best. So that is good. More good examples. Next we have TBIO. TBIO. This is like, honestly, one of my favorite things to see. So again, look, you guys, go to the daily chart. Go to the daily chart, right? So we're looking. We have pivots right here. We have an ultimate low pivot right here. We have a pivot right here at 530. So we have plus. This is an ultimate low pivot at 585. Plus we have $5 psych level, which we have to mark off is always a big level. $5, like $10, $15. And then we have another pivot right here. And see, we have multi-touch pivot right here. Touch, 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 touch. And then obviously these would come after if it kept going up. All right, so we're watching the stock right here. The market opens, all right? It starts to push. It comes up. Now look at this. This is the pre-market high, you guys. All right? That's the pre-market high. So what do we have here? We have a topping tail. It pulls back. It comes down, and then it traps longs on this flag break. This is why I love this. This is right here. Big move up, flag, 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 flag break to the upside, stuff candle in their face. At the same time, you get this stuff candle trigger right here. This is your stuff candle trigger that is happening at a key level, which is $5 psych level, plus causing a fake breakout over the pre-market high. And you have a trend break right here. So guys, this is a triple threat. This right here is a fake breakout over the pre-market high, an over-under of the $5 psych level, a stuff trigger at the $5 psych level, and a trend line break at the $5 psych level. Short, 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 short. With your stop over this stuffed candle, or even over this if you want to be safe. The chance of this reclaiming when you have these pivots here from the daily chart and you have 3 triggers, a fake breakout of the pre-market high, a stuff candle, and a trend break is slim to nil. You got to train your eyes to recognize it in real time. That's what I talk about all the time in the room. Be watching the price action. No trigger. I'm not just going to short it. Because, guys, if you have a daily level at $5 and you just short while it's going into it, well, where do you put your stop? Look how far it went over. It went over 20 cents. What if it went 40 cents over, then fell back below? You already stopped out. Don't be in a rush. Watch the price action. Right here, look. You have no trigger yet. Okay? You have no trigger right there. It's at $5. And then you see the next candle right there. No trigger. You get a bottom tail. No trigger. And then right here, boom, you have your stuff trigger and your trend break. Short that shit. As soon as you see this fake move up and start to go red, you short. Maybe you want to add on the trend break. Whatever. I would short full size. As soon as I see this candle, I see this bottom tail. Right here, when this green candle breaks these 2 candle high, that's going to trap longs into this move, and then it starts to push. Boom, instantly bagged. Short, 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 short. Stop over the highs. Done. Massive trade. On this kind of trade, guys, you start short, and as soon as you see this fake breakout go red, boom. Stuff trigger, go red, bam. You get short, 488, 490, risking 520. That's 20 cents. That's 30 cents. And then what? 1, 2, 3, 4, 5, 6, right? You can lose 5 trades in a row now. You're still green. It's all about risk reward, baby. All right. So learn to recognize those. And now, next one we got MNPR. MNPR. Let's go look back. We smashed the shit out of this one. Because know why? Why do we smash the shit out of this one? Well, it was an A+ setup. Now look, guys. Check this out. Look at this. Ultimate high pivot. Clear as day for the whole world to see. The stock is gapping up big. Gapping up from 250 all the way up. 100% gap up. We have an ultimate high pivot right here. Every trader can see that clear pivot. And look what happens. Oops. So we marked that off in the room. We're watching that level. We're watching that level. We know we're open right at it. Right? It's also right near 550, which is a $0.50. We're marking that off. Now look at this, you guys. Stock market opens. We're watching it. We're watching it. Max open volumes 1.3. That's not that high. We're watching it. We're watching it. Boom. Slam. Short. Smash that shit on this trigger candle. Right here. We have a top and tail. That is a fake breakout over this high into a daily level and a psychological $0.50. As soon as it falls back below this high, rejecting these 2 pivots, short, 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 525, risking 551, 25 cents. 1, 2, 3, 4, 5, 6. That's it. That's all you have to do. Triggers at key levels. Triggers at key levels. Triggers at key levels. Don't be shorting with no reason. Unless you know exactly where your stop's going to be. You can short this right here. This little pop, you could have shorted that, but you have to risk off the true place it failed. Guys, if you don't get a trigger, you can't jam your stop down to an irrelevant place. You want to be using the last true place it failed until you get a trigger. So I would maybe short this bounce, risking off here, or maybe short this bounce, risking off here, but I would never move my stop to a random place unless I get a trigger like this. Right? Because what happens if you short right here, right? If you short right here, you put your stop above this level, because that's the last place it kind of rejected to the left, but not the real place. This is the real place, high a day. Let's say you short it right here, but you stop just above that, then what? You get stopped out right there because you didn't have a trigger first. Now you got your trigger candle. This thing has a slim chance to reclaim after a fake breakout, slam back down on highest volume of the day, right at these key levels. That's it. Short. Bam. Loving it. Triggers at key levels. I call it Trigonomics 101. Learn them, love them, leave them. They'll free you from your day job. All right. If anyone has any questions about those, let me know. It's not triggers at random places, guys. It's triggers at key daily levels. Triggers happening at key daily levels make it like a high chance that it's going to work, because why are they getting a trigger candle at a key daily level? It's confluence. All right? Later.